welcome to the stage, our investors. So we're going to start from Mr. Miner, who's right next to me. He'll do his introduction.
My name is Arnold Miner. I hope you can hear me well. Arnold Miner. I work with a company called DOB Equity. We are a Dutch family-backed impact investor based in Nairobi. We've got 2 offices, one here in Nairobi, one in the Netherlands. And we've been investing in the region since 2007.
So my name is Maina Murage. Sorry, should I put it closer? I work for a firm called Nosken 22. It's a Pan-African growth VC fund. So what that means is we come in after the likes of DOB, come in at Series A, and can follow on through B and C.
Hi. My name is Rob Heath. I'm a partner in a predominantly Cape Town-based venture capital firm called Hawaii. We invest into early-stage tech-enabled businesses that provide real-world solutions and then have the ability to take those and expand internationally.
Hi, my name is Kundayo Temitokbe, co-founder and head of growth at Get Equity. Now, simply SIP, we're not a VC. We're a syndicate community, and basically what syndicates are a group of investors who are either operators currently in different startups who are funding other founders. Some of them are founders themselves, some of them are corporate C-level types who band together.
Thank you so much for that introduction. I think we're going to start with the elephant in the room, and this is probably a question you've had over and over again. What does an investor look for, or rather, what is the top concern about a company or a business before you decide to put your foot into the game?
For us, it is this a real world business? Is this something that is going to be able to be around all the time, or not all the time, but through the significant challenges that it will face, or is this a business that is riding on a wave of sentiment, or is it a storyteller who which is a skill, can tell a great story, but is that a business that I would want to be investing into? Is it a business that, as we say sometimes around the office, like, would you take your next door neighbor's money and put it in that business and still face them the next day? And if the answer is no, you probably shouldn't be investing. So we need to make sure that our investment is into real businesses.
Okay. Maybe to also bring into the mind of a venture capital investor. So we also have return targets and timelines to do to make the money that we've raised ourselves from other investors. So every business that we invest in has to be what we call a venture scale business. So it needs to be able to return, like almost every time we're investing into one business, we are expecting that it could grow 10, 20, 30 times in the 5 to 7 years that we'll be owners of it. So just maybe from the information we have right now, do we believe that that's a probable outcome for that business? And will there be someone to buy it at the end?
And to give you a perspective on DOB, we come in at seed and Series A, right? And so by coming in earlier, we're hoping that you have found product market fit, which has been mentioned, but there's active revenue growth. You should have a good idea of positive unit economics. You might not be profitable today, but you can see a path to getting there.
All right, so for us in our venture capital team, basically it's 9-step processes. We look at one, founder dynamics. It's very important that you are the experienced founder in the market you're trying to work on. We look at the business model. And we're very research focused, so we're already having more like data banks that we already have, which we reference with your business model. So if you come to us with a B2C business model, we already look at what a market incumbents are, where their growth rate is, and if the market is viable enough.
Thank you for that. And recently, over the past few years, we've seen a lot of investors. There's been a great pool of investors in the fintech world. So my question is exactly why is that? And also, is there a chance that we'll get to a point where it will be completely saturated? And there's a tendency of people, when they see there's money there, we all go there. So what's the feasibility of this in the next coming years?
Interestingly, I've had many conversations on this. My answer to that is that there will not be the saturation. And why we are funding fintech businesses is because it is the first layer of acceleration. If you want to grow a single economy, if you can pay well, if I can move money across board, it opens and unlocks every other thing. I think any other company needs to receive money and send money. And so if they become the first layer, things like e-commerce become easily happen. Social commerce, the second layer. The third layer then goes into real-type businesses. And before you know, you're creating your economy. And so that is essentially why fintechs are hot, because if you can't capture the margins and the volumes that you can to become a profitable business, then you win.
Thank you so much. Now we're about to get a bit controversial. We've seen a lot of myths about investors looking for foreigners to be part of the director, the leadership, or rather the founders of these businesses that they're about to invest in. So from your point of view, is this true? And as an investor, is that something that you're actually particular about? Do you go and find out whether there's a foreigner who's a partner, or it's nothing, or it's just a myth?
I'll skip last turn, so I'll go first. I can tell you straight up, it's not something that we do. We've got, we don't have a single foreign founder in our portfolios of companies. So every single company that we've invested into has, we have a South African portfolio. It is, look my colleague and hope I'm right. I think it's pretty much every single one in South Africa is South African. And our portfolio companies in Kenya and our portfolio companies in Nigeria are made up entirely of Kenyans and Nigerians. And that is not something that I want to get pat my back about. But how we go about choosing the businesses is we are looking for people that understand the market that they're operating in, and they're trying to solve solutions and real-world business problems that exist in those markets. And whilst someone may be more eloquent and make a better PowerPoint presentation, have better connections to investors, it does nothing to understand the product. And with the product comes a distribution that would come on understanding who and why this product, or who needs a product and why it is relevant in a market. And I think by default, with us looking with that lens, we've managed all our investments having with local founders.
Yeah, so I would also categorically say no, we don't do that. But I understand why people perceive it this way, and I think it's a more East Africa problem more than West or South Africa problem. And let me try and explain why it looks like that and why it ends up being like that. So, first of all, Kenya specific is very expat friendly, and that's not a bad thing. It's good to have many people from different backgrounds. Then now just look at the VC space. How does it usually work for a business? You start a business, you have no money, you get money from friends and family. So yeah, it's a very complex problem, but I think it's changing. And I would just say it's not something people go out looking for at all. Yeah.
I think there's something you mentioned about relationships, and I think it's very important. It's linked to my next question. What's the place of chemistry and connections when it comes to an investor finding a business? And this is because I've had an investor say, this guy had a brilliant idea, it was genius, but I just didn't like him, and I won't invest. I don't know if you've come across that, because it's something I've had a couple of times. So what is the place of chemistry?
So yeah, in a case where you like the business, you think the guy's a genius, but you don't really like him, maybe you're saying you don't trust him. Maybe you don't trust that he would manage the business well, or you think it might be just very difficult to work with him. I think there's an aspect of you have to be able to manage, even the founders to be able to manage that relationship, because the venture capital, I think, is a relationship game, because we're investing in you, and being able to, investing in you and I don't really like you, it's going to be a very awkward board call. And you can't really call me in the middle of the night because I probably wouldn't answer your call when something bad is going on. So I think you want to have that click with the founder that you're investing with in, and you don't have to be best friends. You just have to be able to speak and bring problems to each other in a civil way. Don't feel like you're being attacked every time, or you just want to have a good working relationship. You don't have to be going to each other's wedding. Yeah.
The only thing to add is, when entrepreneurs come to us to raise funding, they're speaking to multiple investors. And I'd encourage you to do due diligence on the investors you're speaking to as well. Speak to the other portfolio companies they've gotten funding from. Try and understand how they've brought more value other than the funding, because it's a two-way street. It's like getting married. You're going to be committing to this company or this investor for 5 to 7 years. You want to be committing to someone who will be there when you can't figure out how to distribute products because supply chain has broken down. You want to be able to be open with someone who's going to give you guidance on how to think about growth. And so that relationship, it's akin to a marriage. So you want to be able to have those conversations. And speaking to multiple investors allows you to know exactly who would be able to bring that value to you and your company.
I'll say this perspective as a founder. It is critical that you and your venture capital partner click, right? Especially at your earlier stages. Maybe when you grow and mature, you can tell them, well, you don't like me, it doesn't matter, right? But at the very beginning of your business, you need to be on the same wavelength. Direction of the company, where you're headed to, what strategies of growth you're employing. And that's why it's a two-way thing. While we're doing due diligence on you, you're doing due diligence on me. Is this person supportive? Is it helping me? Is it providing network? Is it helping us in finance? Maybe I'm weak in an area of talent sourcing and he has a very large talent sourcing. There are a lot of different supports, and that's why you also look at how is the venture support team of that venture capital firm.
As the particular company is represented here, how often do you get involved in the life of the business that you're investing in?
It depends on the business and the relationship that you have with the entrepreneur and the founder, and depends on what they're looking for. So sometimes we might be very quiet with the company, and they may be going on a journey of perhaps finding product market fit where we may not have the expertise in that sector, and that's fine, we leave it to them. But the one thing that we're very good at is looking and securing the correct investors that come alongside when we start taking our businesses internationally, when we want to start selling, when we want to start looking for strategic buyers, that kind of thing. Then I will speak to you very often. Then we will have those chats.
I think the later you go in the stage of the investor, the less time they spend operationally on you. But this is how I think of it. So incubators, accelerators that are giving you funding will be heavily involved in your business in the beginning. Once you get to a seed investor, less heavily involved, but might help you now also figure out how to hire someone, how to set up a board, those kind of things. Now, at growth, at Series A, B, C, I think now all that has already been set up. It's now a lot more high-level stuff. So like for us, we'll probably, let's say you're in Kenya, you're raising a Series A, you're going to South Africa and Nigeria. There, the GPs will probably sit with you and open doors for you in the different places and maybe go to those meetings with you, but they're not going to be like in your business operationally at any point. I don't think that's a common thing at all.
Okay, for us is you're dealing with, you guys are lucky you're dealing with maybe seed stage. Early stage is hand-holding quite a lot. Good thing for me is that we have a lot of superstars in our team. Basically people who have founded businesses, scaled them. And so we're able to, we check in monthly on our founders every month. We beg them to come and talk to us sometimes. So yeah, but we look at problems across board on, okay, you haven't launched, what's the delay? Or I'm looking for it, like for example, recently a portfolio was looking for a sales, a senior salesperson. Within my network, in just one day, I was able to get them like 20 good high-level CVs for people I trust who would get them their job. But it's also for him to pick, because at the end of the day, we're just there to advise. You're still the one driving the business. I can see that you're heading to a landmine. I can warn you, but if you go to the landmine, it's going to be you. But we do try to actively help and correct as much as you're willing to listen.
The idea is to back great teams. And so if we're investing, we believe you're a great team. What we focus on, though, is to be a soundboard. Because the genesis of our fund, being the family, they'd invested in a business, grew it, was successful, but one thing they noticed is there wasn't a sounding board, and it was difficult to grow. And so that's the role we look to play in our companies. A sounding board for how are you thinking about growth in other markets, how are you thinking about hiring talent, where are your gaps? We help you think through those things. If the investment is sizable, we will sit on your board, and we will do that if we have the expertise to add value. If we don't have the expertise to add value and we still invested, we'll get someone technical to sit on that board on our behalf, and we'll be an observer. The real genesis or the real motivation is to how do we help you scale your business and scale it in the right path and as quickly as possible. And anything that will get us to help you do that, we'll do that. We've made introductions across the portfolio to try and see how can portfolio companies work together to grow. We have helped some portfolio companies raise specific talent from finance to operations to HR. So it all depends on the company, the stage they're at, and the type of support they need.
What is it that I need to tell a business person who immediately stands and raises their hand and says, I'm looking for funding? What are you going to ask them? Like maybe the immediate 2 or 3 questions, without even hearing what they do. What are the first 3 questions you will ask them if they ask that question?
Thank you. So the first question I would always ask is if you're ready, right? The part about being ready for venture capital is looking at critical from point of view. If you have no product, no revenue, no traction, you're not ready. That's the first thing, right? Critically, then I look at the second point is if you are, it's a mom's test. If you are pitching your idea to your mom, how are you going to sell it to your mother, right? And if the story doesn't connect, it's too technical. That's why I said be very simple. Most people have too many buzzwords, and you're also thinking maybe the venture capital person there knows what you're saying. He might just be faking it, but he literally does not know what you're saying. Just be very clean and very straight to the point.
If I add anything to that, I'll be spoiling it. Exactly what he said. What's the problem? How are you framing it? What's the size of the market? And then, of course, the solution that you're offering, because you need to be addressing that problem.
SMEs make a big percentage of what happens in the African economy. And in this case, I'm touching on a specific area, e-commerce and social selling. A lot has grown in that area. There's been a lot of focus around that place. But also for that to be successful, there's what we call an enabling environment. As investors, what will be the key angle that you will bring into this, that even as we are investing in startups in Africa, how do we also consider investing in an enabling environment, like the infrastructure that is required? We are not asking that from a government, but like, for example, if you're considering coming to invest in us, invest even in helping us acquire some of those assets or lease some of those, because I know that you say that is keeping a lot of money in dormancy.
I'm happy to take that one. So 2 things there. The one is, I'm going to go back on my word. I do have networks, and please speak to me later. Okay, I do have someone that could probably. The second one is maybe a little bit harsher. Is I think I understand where you're trying to play in that position when you got the challenges of the different players. You're talking about the real estate, etc. You probably need to do, and I don't know much about your business, but on first hearing, and that's why I got the second contact, maybe some refinements around how you're going to be able to make yourself ready for venture capital. How much of it is tech-enabled that can really fit into the ecosystem that is already there? I understand that there are challenges that you may want your business model, but if you can't change the other, if you can't change part of it, you need to change the business model.
Thank you so much for such a great and informative session. I'm sure we've all learned so much today. So let's give them a good clap, a round of applause. We hope that you've enjoyed the session so far and that you're going to have a good time even as you're going to pitch to the panelists.